Real-time news on the hour, every hour.
Good evening, good afternoon, good night, no matter where you are in the world. First up, we have the news headlines right here on CryptoBanter.com. In the news, Bitcoin closes above the key levels and the market gains another $20 billion in less than 24 hours. Does this mean that the carnage is over? And if the carnage is over, where are we going next? Then, of course, it's all about the big banks. JP Morgan says that gold should be threatened by Bitcoin, while Citi downgrades MicroStrategy for its Bitcoin position. Then Morgan Stanley says that central banks should be wary of Bitcoin as a real threat. Ray Dalio confirms his position on Bitcoin as France is set to implement crypto-to-crypto KYC as soon as the end of this week. Those are the headlines. Today is Thursday, the 10th of December, and that means that there's just 3 weeks left until the end of 2020. Is your crypto portfolio ready for 2021? That's what we look at when we look at Masari's crypto thesis for 2021. And then, as we promised you, we're going to get some of the founders of the most exciting projects out there on our show today. We have Injective Protocol, we have FERRUM, and of course we have Bondly, one of the hottest new projects in the DeFi space. I'm Crypto Man Run. You're watching CryptoBanter.com, the only show designed to bring you live streaming real-time information, because we know that traders like us need real-time information to make the best trading decisions. This is also the world's only call-in show where you make the show and you bring the banter. So if you want to join the show, go to www.cryptobanter.com and call in. Remember, guys, you can remain anonymous. I look forward to hosting another episode of Crypto Banter just after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yeah, you're watching CryptoBanter.com, where you talk crypto, the only station in the world designed to let you guys talk crypto and bring you guys live real-time crypto information so you can make better real-time trading decisions and ultimately make money. This is a hard trading station for people who want to make money. We're not about podcasts. We're not about news that's 3 days old. We're about the here and now and people that want to make money. If you've been watching the show and you like the show, hit the like button and hit the subscribe button now, because when you do that, it sends a message to the YouTube algorithm that people like this content, and when they do, it sends us to more crypto enthusiasts around the world. As I said, we got a very big show today, and of course, as usual, we're going to start the show looking at the Bitcoin price. Now, yesterday on our show, we had Coach K, and we spoke about critical levels that Bitcoin needed to close over to get us out of the so-called danger zone. Bitcoin did close over those critical points, which was $18,300. And so theoretically, we are out of the danger zone. Today, we're going to be talking to a trader who's going to map out the path to Bitcoin 300,000 a coin. I'm super excited about that because I really want to know how Bitcoin can get to 300,000 a coin. But aside from that, today has been all about the banks and the big banks taking on Bitcoin in various ways. Remember this guy? Sorry, not that guy. You remember this guy? Yep, that's Jamie Dimon. And he called Bitcoin a fraud. He said Bitcoin was a bubble in 2017. And if I remember correctly, he even threatened to fire any JP Morgan trader that traded Bitcoin. Well, the bank has done an about turn on Bitcoin, because today they published an article which went out into all the publications. It went out to the Financial Times, the Economic Times, and many other publications. And this article is all about how Bitcoin will take away share from gold in the years to come. And it's written, of course, by JP Morgan. The article was first published by Bloomberg. And the gist of the article says that adoption of Bitcoin by institutional investors has only begun, while gold's adoption by institutional investors is very well advanced. The Grayscale Bitcoin Trust, a listed security popular with institutions, has seen inflows of almost $2 billion since October, compared with outflows of over $7 billion for exchange-traded funds backed by gold. And they're obviously insinuating that money is flowing out of gold from institutions who typically invest in gold, and that money is going into Bitcoin. That's a very positive sign. And we also saw that when we looked at the gold versus Bitcoin charts a few days ago. We looked at the chart and there was a real divergence between gold and Bitcoin. That's a very positive sign because, again, what it says is, it says two things. The first thing it says is that the big institutions have done an about turn on Bitcoin. Like it or not, and whether Jamie Dimon, this guy right here, who's the CEO of probably the biggest bank in the world, like it or not, even if he doesn't like Bitcoin or thinks it's a bubble, Bitcoin doesn't care. Bitcoin is too big. And this is what's happening in Bitcoin. The institutions are moving money out of gold and moving it into Bitcoin. JP Morgan is one of the few Wall Street's banks that's predicting a major shift in gold and crypto markets as digital currencies become increasingly popular as an asset class. The trend poses a problem for bulls in precious metal markets over the coming years if investors move even a small slice of their allocation into Bitcoin. What we can take out of that is that even a small move out of gold will make a big dent in Bitcoin. And that, of course, is a very positive sign for the narrative that we've been driving, that Bitcoin is a digital gold. In other banking news coming out of the banks, there was another article which was published that said, it was published in the Financial Times, and what it said is, will Bitcoin end the dollar's reign? Now, this article was published by none other than Morgan Stanley's investment management's chief global strategist. And the gist of this article was around Bitcoin replacing none other than the US dollar. Now, listen to what the article says. It says, US officials were thus confident that in response to the COVID-19 lockdowns, they could print the dollars in limitless quantities without undermining its reserve currency status, allowing the country to keep running large deficits without apparent consequences. But a new class of contenders is emerging, cryptocurrencies. Operating on a peer-to-peer network ungoverned by the state, cryptocurrencies such as Bitcoin are being pitched by their champions as decentralized democratic alternatives. The article goes on to say that the pandemic has made those crypto pitches sound less like pure digital hype. Fearful that central banks led by the US Federal Reserve are debasing the value of their currencies, many people have bought Bitcoin. Its price has more than quadrupled since March, making it one of the hottest investments of 2020. Now, that is a huge about turn when you've got JP Morgan and Morgan Stanley in the headlines on one day for Bitcoin. But that's not all. Because if you remember yesterday on the show, we broke a story, or we mentioned a story around Citibank. And this was Citibank downgrading MicroStrategy, citing MicroStrategy's stock bet on Bitcoin as being too bold. Now, the irony here is that they downgraded MicroStrategy, even though the MicroStrategy stock price has more than tripled because of its Bitcoin position. Not only that, if I remind you guys, Citibank themselves came out with an article earlier this year that said that Bitcoin could pass $300,000 by December 21. Now, I want to know how the same bank that thinks that Bitcoin may go to $300,000 by 2021 also downgrades MicroStrategy for buying Bitcoin. Is this a case of the left hand not knowing what the right hand is doing? Is this a case of Wall Street banks being threatened and writing or downgrading anyone that starts buying Bitcoin? You tell me. Comment in the YouTube comments. And of course, remember that if you want to join the show, it's very, very simple. Go to our website, www.cryptobanter.com. And there's a button. Hit the button and you can call in the show and we can talk crypto all day long. We can banter. We do it all day long on Twitter and Telegram. Let's do it here. on a medium designed to bring you guys live, real-time streaming information because we know that you need it. On another note, yesterday, our likes and our subscribers doubled from the previous day. And that just means that you guys are loving the content. Guys, please hit the like button, hit the subscribe button, and hit the bell, because if you hit the bell, every time I come on air, you guys will know about it. We've got huge plans for the station. In fact, by January 2021, we want to have 6 hours of live streaming content for you guys, different hosts, bringing you live real-time information so that you can make better trading decisions and ultimately make money, because this market is all about information asymmetry. The person who has the information first makes the most money. You need to have the information first to make the most money. In other news, Ray Dalio, who has, of course, spoken very, very highly about Bitcoin in the past, he reaffirmed his position about Bitcoin. He says he thinks that Bitcoin and other digital currencies have, over the last 10 years, established themselves as interesting gold-like assets with differences to gold and other limited supply currencies. And he says that effectively Bitcoin and them can become a store of wealth. So that's Ray Dalio, another huge fund manager and huge investor, also now talking about Bitcoin. It seems like Wall Street is just waking up. And if that's not enough, last night I went for dinner with 3 or 4 bankers, and they started asking me all the right questions about Bitcoin. In fact, one of them was a huge fund manager whose game it was to take resource gold and silver bets, and he's asking all the right questions about Bitcoin and about cryptos, asking about their store of value and asking how they, of course, replace crypto. Later on in the show tonight, we are going to bring you an amazing segment. We've got 3 of the best founders in the space, or the most talked about projects in the space. We've got Ferum, FERRUM, we've got Injective Protocols, and we've got Bondly all coming into the show, all coming to talk about that. We do have one little bit of dampening news or bad news, so we call it, on the Bitcoin front, and that is that France has declared war on crypto anonymity. What they are saying is they're saying that they want KYC not only on the fiat on-ramps and off-ramps, but they also want KYC on crypto-to-crypto wallets. Now, that's a very interesting decision because France is part of the EU. And for all intents and purposes, the EU allows residents to move around without real barriers, without real tax barriers. One of the most interesting parts of this is that one of the neighbors to France is Portugal. And Portugal is much more crypto-friendly and has a 0% tax rate. Now, over the last couple of years, lots of people have been moving, especially crypto people, have been moving to Portugal like they moved to Puerto Rico from the United States. So I think quite a risky move on behalf of the French. But then again, who am I to say? I guess only time will tell. It's time to look at the Bitcoin price. And of course, the road to 300,000. I'm bringing in Trader Cos. Trader Cos, you're live on Crypto Banter. Welcome to the show. We want to talk about the road to Bitcoin 300,000 with you.
Hey, man. How's it going?
Good. Great to have you on the show, man.
It's
so
you're
convinced that Bitcoin is going to 300,000?
I am. Yeah, I think it's it's mostly based off of a technical idea, but also fundamentally speaking, we're seeing so many big players coming into this space. We're seeing more mainstream adoption, and it's like the stars are all aligning for a bunch of new money to come in. Also, the chart looking perfect for it. So I'm pretty excited.
I'm also pretty excited. And this morning I woke up and I read the news, and it was like one after the other. First was JP Morgan, and JP Morgan saying that Bitcoin could become a threat to gold. Now, that's an $11-12 trillion market, and in this inflationary environment, actually way more. It could even get much higher than $12 trillion. Then, of course, you had Citibank, and Citibank downgrading MicroStrategy. Now, Trader, I want to show you something because I pulled up some charts. So MicroStrategy has bought up about $800 million of Bitcoin, and now they're raising about another $500 million to buy Bitcoin. That's, of course, in the fundamental news. So if you looked at MicroStrategy's share price on the 8th of December, and you looked at the time frame, the MicroStrategy share price had a 15% drop. So then what I went and did was I dug up the Bitcoin price. And at the same time, Bitcoin had an 8% drop, which kind of means that the market is pricing MicroStrategy not as a software play anymore, but actually as a leveraged Bitcoin trade. I mean,
yeah, it could be. It could be. I mean, I would probably want a little bit more data behind it before being concrete on that idea, but that could be possible, and that could be a way for people who are not on a specific cryptocurrency exchange to get access to it. But we'll see. I think it's still a little early to say that, but you could be onto something there.
Yeah, I got it. So guys, I may be onto something. I think you're also definitely onto something, and especially if you're going to talk to us about the road to $300,000, because that sounds exciting.
It is
and as much as I want to say that it sounds ridiculous, it doesn't, because it's only about another 15x from here. And that's really nothing. Guys, if you are enjoying this content, if you do want to see the road to 300,000 with Trader Cars, hit the like button, hit the subscribe button. We need to get the likes up and we need to get the views up. And again, of course, just a reminder that you can call in and you can speak to Trader Cars. Let's ask him about his thesis. Let's challenge him. Let's ask all the right questions to make sure that we understand how Bitcoin is going to get to 300,000. All right, talk me through this thesis of yours. How does Bitcoin go from 19,000 or 18,500 to 300,000? And more importantly, by when?
All right. Should I share my screen, or do you want to pull up the chart, or what should we?
Is sharing your screen. By the way, there's a share screen button on the bottom of your screen. Remember that you can call the show and remain anonymous. As you can see, Trader Cars is doing. We don't know who he is. We're calling him Trader Cars. We have no idea who he is and where he comes from. We just know that he has a very interesting thesis and probably one that we should talk about.
All right.
All righty. Just hit the share screen button on the bottom.
Share. Sorry. It says it doesn't have permission. Let me unlock this really quick.
No problem. While he's unlocking it, guys, remember this is a call-in show. If you want to call in, the best way to call in is to go to our website, www.cryptobanter.com. There's a lot going on there, but also you can just press one button and you can call in live. In the interim, what I'm going to do is I'm going to look out for the YouTube comments. So Bondly launched yesterday. We know Bondly launched yesterday. They're live on Uniswap. They have got an official Telegram group, and one of their founders is going to be here today. Also, someone that spoke about my Pickle call. Yes, I'm very long on Pickle. Very, very long on Pickle, and it has been going up nicely today. The group is going crazy. It's Bondly. Everybody wants to talk about Bondly. We will be talking about Bondly. We do have one of their founders on here today. Stay tuned for Bondly, yeah. Trader Cos, how's it going with our share screen?
Good. I am. We're making progress.
Great. Otherwise, one of our producers, Narissa, if you could upload the share screen as one of the slides in the show, that would be amazing. In the meantime, I'm going to carry on going through the YouTube comments. There are tons of them. Remember, guys, this is your show. If you want to see anything in the YouTube comments, just let us know. All right. So Bitcoin is long overdue to leave the scene. It's actually slowing down the development of real utility tokens that actually make a difference in this world instead of destroying the environment like Bitcoin. Oh, Mooncrusher, that is crazy. That's crazy stuff. Trader Cos, I see we've got the chart called up by Adrian Bashuk, one of our producers. Is that the chart you wanted to talk about?
That's the one.
All righty, let's talk about it.
All right. So first of all, the first thing you can, so this is the 3-month log chart, and you can see from our previous accumulation cycle from about 2014 to 2017, it was 1,096 days. And then that's exactly what this current one is. So pretty crazy similarity there. We're working with this 3-month SR level, which is support resistance, at about 13,900. This chart is from a few weeks back, but it still looks pretty much the same because, like I said, it is a 3-month chart, and so it takes 90 days for a new candle to be put on here. And the price when I took this screenshot was 18,400. Right now we're at about 18,000. So still very similar. So the next thing you can see, it has that pink highlight behind it, which was a really strong bullish candle close through this resistance level.
Yeah, I saw
That's where we currently are right now. So we still have until the end of this month, so about 21 days to confirm this. But all I really need for that is a close above 14K, which seems like it absolutely should happen.
a close
next,
above,
yeah, go ahead.
a close above 14K at the end of December.
Yes,
will take us to above your key level. What happens after that?
that's correct. So if we get that candle close above the key level, then next I would be looking for a retest of that level. If you go towards the bottom of the screen, you can see I write the 3-month consolidation, including a retest of the SR level. This is where you would have to load up in a big way. So basically in Q1 2021, in January, February, and March, you'll be looking to buy any retest of 13K to 14K to 15K, anywhere in there. Personally, I do think we will get a dip back there. And then, I mean, the part everyone wants to talk about and see is the green highlighted box. And that's basically just where we go parabolic. And the target is it's basically the same as our previous cycle. It was about an 11,000% gain from the very bottom, and from 3K to it goes to about 330K, but I'm being a little conservative.
So you know what? I wish I could say you were conservative, and the reality is that, you know, if I spoke to anyone else and said, "Look, Bitcoin's going to $300,000," it just sounds so ludicrous.
It is crazy.
I'm looking at your analysis here, and I compare it to a chart that I pulled out yesterday, which is this chart over here. For those viewers or for those listeners who are listening via the app or via any of the listening mediums, I'm going to talk you through this chart. But what I've done here is I've plotted 2017 versus 2020. And what I've shown is that there were 3 pullbacks. There were 4 pullbacks in 2017. All of them were around 30 or 40%. But then we went parabolic. We've had 2, maybe 3 pullbacks, if you want to count yesterday's pullback, which means that my thesis and your thesis are exactly the same. Mm-hmm. I'm expecting one more major pullback. And when that major pullback happens, I feel that's the pullback that takes us right through to the next parabolic phase. And I think when that next parabolic phase, I think a 10x is not ridiculous. We had that in 2017 where we had 10x, and I think it's not a ridiculous notion.
Yeah, and that's exactly right. And that pullback that you're looking for is exactly what I'm kind of looking for to retest that 13,800, 14,000 level.
Wow. Okay. Do you have any kind of thesis as to the timing of when we could test the 13,000? Because that sounds like it sounds quite scary, but it also sounds like a great buying opportunity. So,
yeah, and I think that could be the last really great buying opportunity in terms of spot positions. You know, you can be leverage trading this as much as you want in the upcoming cycle, but I'm more talking about this will be, or it could be, our last like really great opportunity to load up and accumulate as much spot as you can. And so I would basically be looking for that retest in the next 3-month candle, which would be January, February, March of 2021.
Wow. Okay. You and I have both seen tweets that say things like, we will never see another Bitcoin 10,000 again. We'll never see Bitcoin under 11,000 again. On a very serious note, what do you think is the level that we will not see again? In other words, where do you think we won't go under, and specifically for the next 2 to 3 years?
Yeah. Man, it's tough because like if we are getting the beginning of this next cycle, then I don't really see us going below, I would say a conservative range would be that 8 to 9K level. I have another chart where it's basically it's a zoomed in version of the kind of retest that I'm looking for, and I'll send that to your producer really quick. But it's basically a range between a weekly support level and that 3-month support level that we're talking about. And anywhere between there is where you really want to load up. And I wouldn't really want to see it get below 9K, I would say.
Well, okay. Talk me through this chart. First of all, just for our viewers or for our listeners who are listening via the app or via the audio streaming, we are looking at the Bitcoin USD chart, and we're looking at what time frame is this?
This is the hourly time frame. So this is more of a day trade, intraday. But basically, I think this spike down to 17.6 could be a temporary bottom, but I would have to see what I've drawn here in this chart, which was basically a reclaim of those equal lows. And that other level I have marked there is last week's low. So if we can get above that, I think we'll push back up to around 18.7 and then maybe even 19.7. But if we do pull back further, I'm looking in between 17.2 to about 17.4 as kind of the line in the sand where I wouldn't want to see us pull back further than currently.
Well, that's the 200-day moving averages that are around. I mean, I didn't check recently, but the 200-day moving average is at around 17,200. Also, that CME gap that Coach K spoke about yesterday also lies at that 17,200.
Yeah,
I must say though, having watched the volumes yesterday, the volumes yesterday told the biggest story, because what you saw yesterday was you saw Bitcoin going under 18,000. I think it went to 17.6 on some exchanges. But as it did that, we saw the volumes spiking up, which means that big buyers came in at like 17,600 and 17,700 and brought it back up to 18,400 very, very quickly.
Yeah, absolutely. So if you want to go to that other chart really quick, this is more of a high time frame picture. This is a weekly chart that we're looking at. The other chart that we were just looking at, that hourly one, that's more of a shorter term bottom. I do think that, I mean, this is more speculation, and when I trade, it's more so if then scenarios. So I plan out these scenarios, and it's like, if I get this, then I'll enter a long, or if I get this, I'll enter a short. But basically, with that hourly chart, I am saying that if we don't bounce around here or around 17.4, I think we could be getting a pullback sooner than we'd like. I do think it's a little unlikely that we leave all-time highs untapped on a few different exchanges. So I'm kind of looking for a little bit more of a trend upwards this month in December. Maybe we spike all-time highs, get to 21,000, something like that. And then in January, February, March, we get that bigger pullback.
Trader Cause, I want to ask you a question. If you're trading Bitcoin, if you're trading, not if you're hodling, because if you're hodling, it doesn't really matter. But if you're trading Bitcoin, where would you look to take your profits? Now, the reason why I ask is because I'm pretty long Bitcoin in my trading position. And I think I should be exiting some of my position to get some cash to buy Bitcoin cheaper. But I don't know if I should do it now or if I should wait until a level. I'm kind of keen to know what your level is where you would start offloading some of your trading positions.
Yeah. So I started taking some profit, I mean, late November, because we had basically just been going straight up since the start of October. So I'd been scaling out little by little. Then we got that one dump on, I think it was the 25th or the 26th of November. And a lot of people thought the top was in there. But then that got bought back up pretty quick. We had another V-shaped reversal and we pushed to nearly 20K. Now we're selling off a little bit more, but it's kind of a slower grind down that we currently have had for the last, 10 days. But I think this whole range between 18 and 20, like if we spike up to 21 and then get rejected there, and then we do have that pullback to 13, 14, I don't think you'll be super upset about taking some profit up at 19K versus 20, So
I think I feel the same way. I think I'm going to take profits somewhere between 19 and 20 just to be safe. I don't really want to call it up. Trader Cos, we'll continue in a second. It looks like we have some breaking news. Just want to get on top of the breaking news.
Breaking news on Crypto Banter, where you break the news.
HK, the company that develops around the Cardano or the ADA protocol, announced that that Bondly will be the first NFT DeFi project to support the Cardano smart contract launch. And we have Bondly on our show today just after the segment. So what a great time to break the news. What a great time to have such an amazing project on. Excited to have it on. Brandon, I can see you in the waiting room. I can see all the others in the waiting room, but I want to finish with Trader Cos because this is a fascinating discussion about Bitcoin. Producers, can we get the charts back on the screen? Trader Cos, so we said anything between 19.5 and 25, take profits, and then kind of wait for a candle down to about 13,000 in January.
Yeah, so that's kind of the idea I'm having right now. If we do lose that 17.2 to 17.4 area, then that's when it'll kind of confirm for me that we're getting more of a pullback to that 13.9, 14K. And so that's when I would definitely scale out more if you haven't already. But this whole area up here, if I'm right about this bigger pullback, then I don't think you'll be mad that you took profit anywhere in this section. And I'm not saying sell all your spot holdings. You still want to keep as much exposure as you can. But in terms of shorter term stuff, we're pretty much in an area where I am comfortable starting to scale out. And if we do get that last spike up to 21, then that's probably where I'd be like, okay, I'm getting ready for this pullback now.
All right, amazing. Now, Trader Cos, that's a very good picture for Bitcoin. Tell me what that means for Ethereum, because most of the traders and investors that have come on the show have been more bullish about Ethereum than they have about Bitcoin in the short term. They kind of said, look, Bitcoin's found its positioning. It's almost near its all-time high, but Ethereum is very far from its all-time high.
Mm-hmm. Yeah, so last time we had this same kind of like basically the bull run in 2017, Bitcoin topped out in mid-December, and Ethereum didn't top out until I think it was mid-January. So about a month later after Bitcoin. And so kind of what I'm seeing for all for the capital, for the wealth to transfer from Bitcoin to alts would be one of those bigger pullbacks where it's like, okay, I think Bitcoin put a temporary top in. Let's sell our Bitcoin and let's move it over, buy some alts, and start having some fun there. So right now, Bitcoin is still acting like it's the king. It's still pushing up more. But then, yeah, bigger picture, I do think once Bitcoin gets a bigger pullback, people start selling Bitcoin, the money will move into altcoins and Ethereum especially.
Okay, and any specific altcoins that you're trading? Very keen to find out what it is that you're trading. We saw on your Twitter that you shorted ETH on Monday. Probably was a great call. What else are you trading?
Yeah. So that short on ETH was more lower time frame, and also it was a little bit of a hedge because I'm looking for longs on Bitcoin, and I had some limits set, and so I kind of wanted the Ethereum short to hedge a little bit of my exposure. But yeah, so in terms of altcoins that I like, Link, I like to trade a lot. I think DOT is a really cool project.
What's your entry point? What's your entry point on Link? You like to trade it kind of like, where's your entry point and what are your exit points?
Yeah, well, I mean, that changes quite a bit on a day-to-day basis, and also depending on what kind of time frame I'm trading Link, because if it's a much shorter time frame thing, then my targets aren't quite as far, and I'm buying it.
Right now, where would you look to enter if you were looking to enter Chainlink for a relatively good position? Where would you look to enter? Would you enter right now? Would you wait for a bit of a pullback? If you were to look for a pullback, where would the pullback be?
Yeah. So if I was to enter, I do think that Bitcoin is going to bounce from this area if we can reclaim that 18.2-ish level, which I showed you guys in that other chart we were just looking at, the hourly chart on my Twitter. And so I use other coins as confluence. Like if Bitcoin is looking bullish, like if it's going to push up more, then I feel a little bit safer entering altcoins. And so if Bitcoin does get back above that level, I'll be even more convinced that we have a temporary low here at 17.5, 17.6. And then I would be comfortable buying Link. I'm sure it would be around the low 12s at that point. I'd put my stop loss at around 11.5. And I would probably
buying in at 12, stop loss of 11.5, hold it up to what, the 16s?
I would probably be looking at around 14 first, and then it kind of just depends on what Bitcoin decides to do. If Bitcoin can get back above that daily SR level at 18.7, then yeah, I think Link will be able to push up to 15, 16 as well.
Amazing. Okay, I want 2 more calls from you, Brandon. I see you in the waiting room. I'm going to get you in right now. Just want 2 more calls from Trader Cos. It's not me. It's the YouTube comments. It's our viewers. They love these calls. They love these trading calls. This is what also gets projects onto our stream. I guess we probably need to get Sergio from Chainlink here at some point here, or Sergey. Come on, 2 more calls that our traders can go and look at now. What are we looking at?
Do you want something like a smaller cap altcoin? You want something like longer term, like a gem, maybe something like that?
Yeah. Give me one longer term gem. Yeah, give me a long term gem.
Okay. So one chart I've been watching a lot and a project that I like quite a bit. I will send a link to the chart right now to the producer. I just put that in there. It is Utrust. Their ticker is UTK.
Utrust has been on the show quite a bit. Utrust seems to help get crypto adoption. They're great crypto distributors. Tell us why you like it.
Yeah, so Utrust, awesome project. And so that first gray box that we're looking at, the one that we're kind of at right now, which I think we're breaking down from, which is okay. That just means we get to buy more lower. So we just get cheaper UTK, So that's a 3-day support. We've tagged that one quite a few times. So if you see on the left of the chart, we bounced around there around 3 times, then came down in early November, tagged it again, and then early December, and now we're kind of breaking through. So I think demand is kind of drying up in that level, and I think we're going down to that that weekly support, which is the other gray box. And so
just for our viewers who are listening to the show, not watching the show, what is the level of that box?
So it's about 380 to 290. So that zone right there, 290 sats to 380 if you want to zoom in. That bottom gray level, that's kind of where I will be loading up on as much Utrust as I can for a longer term position and stop loss. Basically, I mean, I would kind of just expect it to be.
Utrust, I must say I'm also a holder of UTK. So yeah, like UTK a lot. One more coin I've got to bring Brandon in, especially now that he's dropped some breaking news on us 1 minute before he was due to come on the show. The lines, by the way, are going crazy. I must say I've never seen anything like it. If you look at the comments here, Bondly. People talking about the big B. They want BBB. I guess in this case, it's not the Bitcoin B that I have on my shirt, but it's the Bondly B. Brandon, I want a Bondly shirt. Otherwise, we can't do this. So Trader Cos, one more coin before we have to cross over to the next segment of the show.
Yeah. Last one, FTT. It's FTX's exchange token. I am a huge supporter of FTX. FTT is one of my biggest altcoin holdings. I think by buying FTT, you're betting on Sam, you're betting on FTX to succeed. I think they're the best exchange in this business. They don't have the most volume yet, but in the amount of time they've been around, the amount of innovation that they've been doing. I just think they're going to be a really big mover in this space. And you guys probably know Sam was the new President Biden's second or third biggest donor. And so he's making his connections. He's the best at what he does.
Smart operator.
FTT is my biggest altcoin holding, and I continue to add to this.
Alrighty, Trader Cars, it's been awesome having you on the show. Really awesome having you on the show. I know we've been trying to get this for a long time. We managed to do it. If people want to follow you on Twitter, it's at Trader Cars.
That's right.
If you like the segment with Trader Cars, hit the like button, hit the subscribe button, and then of course we'll get him on again. Trader Cars, thank you for coming on to Crypto Banter. We're going to move on, and we're going to move on to the biggest hype coin of the day, that's for sure, and that's of course Bondly. Brandon, welcome to Crypto Banter. I don't know why we don't have sound. Let me just see if it's on my side.
It's on my side. Thanks, Ryan, for having me. Appreciate it.
Alrighty. So before you carry on about Bondly, I want to tell you that the lines are going crazy. I've never seen anything like this. I want to encourage our listeners and our viewers, if you want to call in and speak to Brandon live on air, you may not get some other opportunities. If you want to, all you need to do is go to cryptobanter.com. The first slide gives you a link which says StreamYard, and that brings you straight into the studio, and then you can come in, talk. Let's banter. Let's talk about Bondly. Let's Bondly banter or banter Bondly.
Yeah.
Whatever the right way to say it is.
Banter Bondly with the Bond fam. There we go.
Now, look, I need to get a shirt with a Bondly bee because the only one I have is this bee.
Yes. We actually had a merch store. It's a funny. We'll talk a little bit about sort of what we're doing, but yeah, I definitely you're on the list, Ran. Absolutely. And I want to just go through sort of what. Leading on your last segment, I want to just do maybe the FA part of the TA thing about Bitcoin. So we have what I don't think many of your viewers might not know. There's a $4 trillion market for digital assets that are coming into crypto, and we're not talking about fungible tokens. We're talking about NFTs. And what people don't realize is that this is not my number, right? This is Statistica's number. Our whole economy is changing. How we think about commerce, how we think about business, it's all moving digital in new and different ways. So things like you guys might have seen digital businesses but not realized it. So some of the Instagrams that your watchers follow, like maybe a travel blog, it looks like a very attractive 25-year-old who goes around the world. That's actually a $2 million business because every sponsored post that person does, they get roughly $20,000 to $30,000 for that. So these things are amazing businesses that actually run completely on the internet. There's no what I would say there's no front door that's needed. And they don't really even know what the product is, except they're advertising in an interesting way. And the people who follow the Instagram are actually the product. So why are we talking about this, right? So this year, 2021, is the inflection point where these type of businesses actually get NFT'd and brought into crypto with us. So what does that mean for Bitcoin, right? It means huge things, right? We have a whole new type of asset to buy that's native within crypto, right? It might be on a different blockchain, but then Bondly, we are the first e-commerce platform that's built specifically for digital assets. So we will support native Bitcoin as a payment method to buy these type of assets that have actual sustainable and revenue on by month that that are completely based around things that are valued outside of crypto. Like we didn't create these valuations for these type of businesses. Warner Music does. Sour Patch Kids does.
Got it. So let's take a step back because I think
Sure.
a lot of the questions that we're getting, a lot of our viewers actually want to know. Bondly came onto the market just a few days ago. It came on with a whole lot of hype. What is Bondly? What does Bondly actually do?
Yeah, so building on that last point, right? So we are a next generation e-commerce platform. We're similar to PayPal in that we offer a lot of financial features like reoccurring payments, like escrow. We're similar to Stripe, where basically if you have a website, you can integrate us very easily as a payment method, right? But the benefit of all this is we're smart contract driven. So we can do things like do cross-border payments. Every benefit you get from operating in a smart contract, you get from using our product as well. So we're really like going back to the point, right? We are ready. We're here and ready to basically usher in this next generation of digital assets that we're going to see that join us here in blockchain.
So you're saying that effectively Bondly can easily make any business, any online business or any business, a digital payments business, but not a digital payments business alone like Stripe or PayPal, but actually have digital fun, programmable money. And I guess that's where the discussion around NFTs comes in, because now what you can do is you can take a digital business and you can easily integrate non-fungible tokens into the digital business.
Well, yes, absolutely that, but also buying and selling these type of businesses. That's the real thing. So you take that travel blog with its Instagram, its domain account, you actually wrap it into a trustless NFT that has all the credentials and everything about that business. And only that person who has that NFT is able to access and have that. So it's not just I have a proof of ownership. It's actually all of the digital assets of that digital business are encapsulated in that NFT. That's what's being bought and sold. So if you think about that, what sort of market that unlocks when we have businesses that are externally evaluated, but now are sitting on a blockchain and it can be traded. That's the purpose of Bondly. So we want to give easy for your so you just talked about taking profits on Bitcoin, right? So our goal is to say, well, at a certain point, when you want to take profits, don't just put it out to cash. Actually, you can use Bondly to buy a digital business like this that earns you sustainable and monthly revenue outside of the business, but you don't even need to trade out of crypto. You can actually pay in crypto right away. And this is another method to take profits.
All right, let's go one step back and then a whole lot of steps forward. Is your tech working and ready? Are you on mainnet? Are you being deployed at the moment? Or is this another project with another business plan or another white paper?
Yeah, so we're launching. So we have a smart contract platform. It's enormous. So we realized that there's part of that platform that was going to actually work as a standalone product, and that's called BSwap or OnSwap. That's coming out in the next few weeks. So before the new year, that'll be out. That is our OTC trading platform for fungible tokens, and then we're also going to have an NFT to NFT swap function on that as well. But that's sort of like Bondly Junior. Like that's the first small part of the overall vision of what we're doing. Our actual e-commerce platform launches next year, and that's where we have about 15 MOUs that are in progress with different e-commerce sites, where we'll be integrated next to PayPal, next to other major Alipay, next to the other major payment options on those e-commerce platforms.
All right, I want to ask you a more personal question. So we run a station. The station is called Crypto Banter. How can we use NFTs to promote this? Or how can we use Bondly to build NFTs into our business? And the reason why I'm asking is because I think a lot of our viewers have digital businesses, be they Instagram accounts, be they stores. Maybe if we talk about a practical example of how we can integrate NFTs into our business, that will show our viewers how big this NFT market is.
Yeah. So do you have a like a VIP status for your channel now?
Coming in January.
Okay, perfect. Well, that's the best example. So everything you might have wanted to do with Patreon, we can do 1,000,000 times better with NFTs. And not only that, not only will you have people you can basically make it so that you have special features and things about your show that are really important that you can put behind a wall that says only people who have our NFT and can sign with an Ethereum address can get in and see those. So you can have special perks for your most special people you know. You also can see all of them on chain at any time. So you know exactly who your audience is at any moment. Like these are your super fans. Like you can have whoever comes to the YouTube here, but realistically, as part of their identity is actually what they're doing. So guess what you'll know? You'll know how do they use Uniswap? Do they use Coinbase? Right? These are the type of things.
What tokens are they trading?
Exactly.
I would have everything, right?
So you can actually make a leaderboard of what your folks have traded. And if you think about adding Ren BTC as one of those tokens, right, that goes back to the base coins that you guys are talking about all the time as well. So there's tons of advantages for you, tons of advantages for your fans. Your fans say, wow, I don't need to just give you an address and then hope that you airdrop me. They can actually see, oh, you're owning your NFT. So if you guys are giving some other, benefit away, whether it's another NFT, whether it's some sort of promotional token, whatever it is, you have the addresses ready to go.
All right. Now, what is the Bondly token actually used for? Now, the reason why I talk about the Bondly token, I'm just going to call it up onto the screen right here, just so that people can see what we're talking about here. The reason why I'm doing this is a lot of our viewers are complaining that sometimes they go to the wrong token. So a lot of people yesterday complained that they bought the wrong FRM and they bought FOAM token instead of FERRUM. So this is Bondly. We can see that the token is trading at 15 cents. First of all, what is the use case or the application of this token? Why would people or why should people buy this Bondly token?
Yeah, so some of our fans who are in the chat, they know we're adding new utility every day to this within our network of products, right? But the basics are, lowering fees on our products. Certain vendors who are using this as a payment rail have staking requirements that are there, and then it's also used in Bondex for cross-chain trading. So Bondex is our AMM that we're going to be introducing next year as well, and that's actually built on Polkadot. So okay.
So you're saying Bondex is built on Polkadot, not on Ethereum?
Yeah. That's correct. So our whole initial stack is all built on Solidity, right? Because that's our background. That's our CTO. Everybody, they're Solidity experts for the past 4 years. So we're building there, and then there's a layer on the parachains for Polkadot that's called Frontier, and that is Frontier EVM is basically a way to take Solidity code but run it on Polkadot, right? Yeah. But once we go live with our own parachain, that's when we can support cross-chain AMM directly.
Okay, and what was the announcement today around IOHK and Cardano? Tell us what you guys are doing with them. We did have Charles on our show a few days ago.
Amazing.
He is super bullish on DeFi, but more than that, he's more bullish or as bullish on NFTs, which is, I guess, a great combination.
So I mean, literally, they had hundreds and hundreds of other projects to select. So we're super honored that they chose us to be the first one to go to market with them, because they sort of acknowledge the fact that we're offering the business customers, which have already signed with us for next year. We have the NFT. We have our own card game, by the way, our card game that we use, and many of our fans here in the chat have cards with us, right? I think I see some familiar names.
I see that. I see there's so many of them in the chat.
Yeah. So
I've never seen the chat go this crazy. All right, so I'm gonna send it out to the Bondly community, because I can see that you guys are an extremely strong community, and that's actually something that I want to talk to you about, because there are some lessons there. Bondly community, hit the like button, hit the subscribe button, please, guys. Let's do it. Let's get this show more distribution. The more distribution we get, the more we can get projects like Bondly, Ferum, Injective Protocol on the show. These are the 3 hottest projects in the space, if you look at them this week. And we're bringing them to you in one day. And it's only because of people like you that hit the like button and hit the subscribe button. Then on another note, if you want to call in, then there are a whole lot of numbers to call in. But my suggestion is just go to the website, hit the link to call in, speak to Brandon, speak to Ian. Ian's here from Ferum. Speak to him. Let's go, guys. Let's banter. Let's talk crypto. You may not get another chance to talk to Brandon one-on-one live. If you want to do it, you can remain anonymous. You can just enter a nick and just hop on and remain anonymous. All right. I want to talk to you about community. How does a project that is this old or this young have such a strong community so quickly?
I think it's mostly my beard, Ran. Like, that's the only difference between us, I think.
Yeah. I must grow a beard then. I must grow a beard then.
I think that's it. No, I think what we hit between all of our products and with the NFTs and everything, we really hit a latent demand of people who want to participate in so our card game. Let's talk a little bit about that, right? So our collectible card game is also made up of every card being a high utility NFT. What do we mean by that, right? So not only, so think of if you could buy a Pokemon card that was also an Amex Black card that also gave you no fees on PayPal, and then also gave you a Netflix subscription. Excuse me. That's what one of our cards can do.
This is like a mind fuck. Sorry, I know
Yeah.
I'm not supposed to swear on air, but what you guys are doing with these NFTs effectively is you can ultimately program money into these fancy little wrappers.
Yeah, and think about this, right? It's not even that we program a lot into it. It's that we know who they are. Like, it's an identity thing. And then that means we can give them anything we want at any time. And that's how you build a community.
Alrighty. You guys did a token sale. You've raised some funds. Talk us through the various rounds. I did hear rumors in the market that there were some people that got in at around 2 or 3 cents. If I see the token price now is at around 15 cents. Just give our viewers, I know you're a founder. I don't want to put you into buy sell territory. I respect that, but just give our viewers an idea of, if they're buying now, how are they buying relative to earlier rounds? It just gives them a sense of where they're buying the token.
I think the best resource, and I'm sending this to your producer, is what we call the bond paper, which is our somewhere between a light paper and a white paper. But that has all the information. Like, we've been very transparent there. Then also on our Medium, we have a post on sort of the private strategic rounds we did, and then how it integrated with the airdrops we did relating to our card sales, things like that.
The last raise round was done at what price?
So you want, this is where this could be a gotcha moment for me, because I want to make sure that your fans go here and look up the right numbers. But this is entirely accurate, and it also make sure to check out the Medium, because we have a transparency article in Medium as well that covers it as well.
Alrighty. All right. So let's talk about one more thing before we bring in Ian from FERRUM. Rollout. What is the rollout plan? What is the distribution plan? How are we going to get adoption? Crypto projects are great. A lot of them look amazing on white papers and light papers, but can't actually get real rollout. Keen to know what your plans are. Who are you attacking? What's the attack plan? When can we expect to see some traction with real world providers, with crypto providers? Give us a sense of that.
Yeah, I mean, what we have shared with our partnerships so far is we have one with an integration partnership, and then a special Oracle partnership that we have with Chainlink. That's one we talked a lot about. Today's the one with Cardano, and these are just representatives of projects that we could share the private information of the deals we've been closing for next year that are already on that roadmap. So there is some aspects that we've kept private. But those that we've NDA'd with, we have shared that with them. And really it comes down to adoption. Well, we have products that are designed specifically for people in crypto already, and that's going live. That's BondSwap. We have products that are going to introduce brand new people to crypto, which is Bond Protect. That's our e-commerce platform. And then BondX basically pulls the whole thing together. So
talk me through Bond Protect, because that sounds like a very interesting project. How are you going to get non-crypto users into crypto? I think that's something that as a community, we all have a huge interest in.
Yeah. So if you look at the major sites that are selling digital assets now, like for domain names, for example, we're talking, hundreds of millions of dollars that are being sent to each other in domain names. Domain names are functionally a digital asset already, right? So the thing is, people aren't using crypto for that right now because they're using old methods and old rails to do new digital transactions. So Bond Protect provides the framework for every one of these sites that does digital asset sales to integrate directly into their site, so they can accept it as another payment method. And guess what? These sites love us, and they love us because we're offering them 2 billion people who are previously unbanked can now participate on their site. So of course they love us. They want to integrate right away. And actually,
they don't know that they're using a crypto product. Have you managed to design it in such a way that you don't need private keys and you don't need to store a seed and store 24? I mean, have you fixed that problem?
So it's a fix in progress, right? So we have better fiat on and off ramps, which we do have integrated into Bond Protect. There's still premium for that service, right? But this is what's going to happen over the next year. If I can just be a little bit, see the future with you guys a little bit. These rails are going, the barriers to entry for these rails are going to keep going down. There's going to be more opportunities, and Bondly will be there to integrate everybody who's innovating in this space. But I think for the most part, people can entirely start a brand new business without touching fiat once. Like, that is the goal for us. Like, being able to start with an idea, go through the domain name process, start maybe selling your own digital art, and never have to actually touch fiat at all.
That's I can't wait for the day. Brandon, it's been amazing having you on Crypto Banter. The lines have gone crazy. Your fans, unbelievable. I'm going to call up some of the comments onto the screen just so you can see.
Guys, throw the W's up for Ran. Guys, throw the W's up for Ran.
Throw the W's up, hit the like button, hit the subscribe button.
Yeah,
hit the
subscribe, guys.
Guy, there is a question here around the max supply of Bondly. Do you know it offhand what the max supply is?
Yeah, there's a billion tokens, but keep in mind 40% of them are designed specifically for staking and interaction rewards with our network. So, for example, if you're a vendor who's selling some sort of good, digital or not, and you're using it, there's a staking requirement that you have. But it's not just to use our product. But it's not just something you have to pay to us. Actually, we pay you, right? So out of the staking rewards for using our product, we actually pay you rewards for that. So that's
right now, if I have Bondly right now, can I stake Bondly right now?
So our two pools that we have that were our gold and our VIP pools did fill up almost instantaneous. So there is a pool right now that you can stake in that you can use that to win one of our NFTs. So the pricing for our NFTs of that category right now is somewhere between 2 to 5 ETH. And every 2 weeks, you're entered to win a lottery, or basically like a giveaway, where we are dropping these NFT cards from our card game on people who participate in that pool. So that's a good way to, if you see the long-term vision with us, it's a great way to participate.
Brandon, it's been an absolute pleasure having you on Crypto Banter. Look forward to getting you on again. I'm looking at the comments again. The comments are going crazy. Sorry, guys. We have to move on. We have to move on because as we promised our viewers today, we've got 3 big projects on for you today. We said we're going to have Bondly on for you today, which we've just had. And the next project that we're going to talk about is, of course, Ferum. Ian, welcome to Crypto Banter. Brandon, I'm going to bid you farewell for now. Ian, welcome to Crypto Banter. So good to have you here. So good to have someone here from Ferum. And especially because yesterday we had a huge panel and the token kept coming up and up and up. I don't know if you managed to watch the show, but everyone was talking about Ferum. What the hell is Ferum? How come some of our viewers have never heard about it?
Wow, well, that's a great intro, but I want to give a shout out to Brandon. He did a great job. I've known Brandon for a long time, and we were actually honored to be the incubator that brought Bondly out to the market, and they've done a tremendous job, obviously exceeding, I think, everyone's expectations, to be completely honest, although incredibly competent team, and they've done a tremendous job. But yeah, shout out to Phil, Coach K, and the others who were on who were on your channel yesterday. Great guys, long-term Ferum supporters. I mean,
it's crazy because as you came on, again, the lines have gone absolutely crazy. Going Ian, hi Ian, you got Ferum, yeah, guys, hit the like button, hit the subscribe button. Let's get distribution of this so more people can get this content and more people can meet the people behind these projects. All right, Ian, tell us, let's get to the more serious stuff. What is Ferum Network?
Sure. So Ferrum's building, it has been building for the past almost 3 years, what I call a DeFi ecosystem that is both user-facing and project-facing. So we have 5 products, including an exchange business in Africa, a token bridge to swap assets between Ethereum and Binance chain, a wallet which allows you to send crypto over any medium using a link, and also an incubator. I shouldn't forget, as Brandon was just on. But the business that I think has been the most successful for us is our staking as a service, which now has over 40 or maybe even close to 50 clients. There's I would
And how
imagine
much-
50 million locked
how much-
value.
How much
Go
money
ahead,
are you
Ren.
staking? What's the total locked value of your staking business?
So I would have to look, but the last we checked, it was around $15 million. I think it's probably more now. You know, how our staking works is maybe a little bit different than some of the other DeFis you see. We actually provide a service to projects like Bondly, for instance, who want to provide additional utility for their token, and so we can roll out a staking platform for them in really just a matter of days now. That's on their website, fully white label, sort of customized. There's 4 different kinds of staking, all sorts of different things you can do, and that's been a just tremendous hit for us. But yeah, so FERRUM does a whole lot of things. We've been around for a while, but it feels good to finally be getting a little bit of recognition out here.
And how long have you guys been around? When was the FERRUM network founded, or the business founded?
God, it was early 2018, like mid 2018 is when Naeem, my co-founder, and I teamed up. We both quit our jobs. We won a competition to pitch the project on the main stage at Consensus, and things just sort of took off from there. So it's been a long grind, but we love it. So here we are.
And when you won the competition at Consensus, what was the business plan? What was the vision? What were you going out to solve? I mean, 2018 seems like a lifetime ago in crypto. It seems quite strange that today you're in the DeFi space. In 2018, I don't even think people spoke about DeFi in 2018. I think that was a 2019 term. So when you stood up on the stage at Consensus, what were you pitching?
It's a great question. I mean, the industry has changed tremendously over the past number of years. And while DeFi wasn't a term, we were still talking about what I still view as the most valuable application of blockchain technology, and that's in the financial realm, right? And so, the initial vision of FERRUM, which still remains to this day, is basically a cross-chain DAG network that allows you to exchange and transact any digital asset instantly or near instantly for near zero fees. That's still the core. That's the FERRUM network itself, and that testnet has been sort of built for going back almost 2 years now. But we've evolved with the industry, and so we realized, look, it was 2018. The bull market had ended. We were moving into a bear market. We needed to build a real business. We couldn't just be a token and, let's raise $50 million. Like that market had ended, and we needed to build something long term. And so that's why, we launched an exchange business in Africa. It's why we now have a successful staking as a service business. But yes, the cross-chain DAG is still in the cards, still in the works. We're going to be turning to it next after the next big product launch, which we're working on right now.
Obviously, I mean, business plans change, and I guess the biggest and the best founders are the ones that can change their business plans very quickly with the limited resources to match the environment. Let's talk about capital. So you guys have obviously raised capital. In fact, if I look at you've obviously raised capital through a token sale. If I look at the market cap today, the market cap's about $9 million. Tell us about how much capital you raised. When did you raise the capital? Did you raise the capital before the 2018 Consensus win? Did you raise afterwards? Talk us through how this company or project is financed. Sure.
So no, we raised in the heart of the bear market. It was I think we took in our first seed investment in September 2018. Bitcoin was tanking, Ethereum was tanking, and only a couple months later, I remember Ethereum hit $90. And it was almost impossible to raise funds. So my co-founder and I learned lessons that we still apply to this day, which is to be incredibly lean, work extra hard, don't take on unnecessary costs, because we knew we had that seed money, and we didn't know when the next round was going to happen. Fortunately, we had great people around us, and we were able to raise an ICO at the end of 2019, or not the end, August 2019. Raised around $1 million, and we've been living on that. I mean, it's been fine. We're a lean operation, but yeah, and the bear market was tough. It's completely changed now. I mean, wow, we're like for the incubation projects, like raising funds, like it's no problem. But back then, wow, it was hard.
All right, so you've got you're okay funded. I mean, you're not very, very, very funded. You're saying the most exciting part of the FRM network today, or the FRM project today, is the staking services. What else should we be looking out for? You mentioned a new product launch. You mentioned an incubator. I want to dig into those. Let's talk about the new product launch first.
Gosh, I'm sort of under a very strict NDA on that one. It's a DeFi protocol which will allow early supporters and stakeholders in it to, I think, experience really nice returns. That's all I'm going to say for now. We're building. It's under lock and key. It's under audit actually right now as we speak. I don't want to say a whole lot more. It's going to be big. It's going to be really big, and it's going to make our stakeholders, I think, a lot of money. So that's really that's all I can say for now. But there's other things I'm more than happy to talk about, like the incubator and other tech that we're building in a few months after that.
Well, I just want to remind our viewers, I see the comments are going crazy. Guys, hit the like button, hit the subscribe button, hit the bell, because when you hit the bell, that tells YouTube's algorithm that we're here, that we're doing great things. And I think bringing projects like this to light, projects that are not in the top 10 or top 20 or top 30, but the gems, the hidden gems. I mean, if I look at FERRUM Network, it's ranked number 434. Such an amazing community. I can see that you guys have got a huge following. You know what I want to do at this stage? I want to bring in our producer. His name is Adrian Bashuk. He's a ex-CNN, CNBC producer. And today he's very much in crypto, but what he does is he goes and looks at the social airwaves. He looks at Twitter, Telegram, and he tells us what people are talking about on the socials. Adrian, what are people saying about FRM on the socials? We can't hear you, Adrian.
I got to unmute myself. I'm sorry. You can tell by the comments there. People are excited about FERRUM Network. This cross-chain kind of incubation where you see the DOT ecosystem emerging. Ethereum is Ethereum, and it's the world's supercomputer. It's not going anywhere. Those devs, we've been at DevCon in both Prague and Osaka. The Ethereum community is as strong and technically sound as you can get. But you see the emergence of the DOT ecosystem, for example, and then you see cross-chain partnerships, FERRUM Network, Bondly, a project that they're incubating, and you see a lot of excitement because we understand that there's this decentralized model in all of blockchain and crypto, and people are embracing that, and you're seeing the emergence of it. So there's a lot of excitement.
Ian, tell us a little bit about your accelerator. I'm very keen to hear. I mean, you guys say that you incubated Bondly. Keen to hear a little bit more about your incubator. I'm sure that there are viewers out there who are doing exciting things, got some great projects. Tell us a little bit about what it is.
Yeah, absolutely. So the incubator, I think, solves a number of major problems in sort of the early stage fundraising scene. Most of the time, if you want to raise funds in an early project, you have to have connections to maybe a big VC or something like that. You have to know people, and then what happens is those large investors take huge allocations, and what can end up happening is those investors then sell in the secondary market, maybe too early before the project really gets legs behind it, before the project gets utility for their token or a strong community. And it can be sort of the downfall of that project. So we wanted to flip that model on its head and start with community first. So we teamed up with another project called DuckDAO. Shout out to Lucas and Ken, who have really been industry veterans for the past 4 years, raising funds for really hundreds of projects.
Did DuckDAO, were you part of their incubation, or you helped bring about DuckDAO? How did that work?
Yeah, so we're actually a partnership. It's FERRUM and DuckDAO together. And we find what we view to be sort of undiscovered gems, and we help bring them to market. Bondly was the first one that we did, and we're actually about to announce the second one in about 4 hours from now. It's a really hot new project. You talk about cross-chain, you talk about Polkadot. It checks all the boxes, so I'm super excited to announce.
DuckDAO is a very, very, very exciting project here because it's essentially decentralized VC, right?
That's it. So it's that same model, but with the DeFi twist. So FERRUM brings our unique brand of technology to it. So the staking as a service, of which there's many different kinds we can offer the projects. Technology such as pool drops, swap drops, link drop technology, which is the ability to send crypto over any medium using a link. That's all FERRUM network technology. And we basically provide that to the projects on sort of a bespoke, ultra customized basis. For instance, with Bondly, right? We did what for the first time a staking round using the FERRUM network staking technology, where they could stake the Bondly token to earn an NFT that had never done before. But as an incubator project, they got access to this sort of unique technology. So it all comes together with the decentralized fundraising, the FERRUM tech, and then you can't forget the influencers, which your guest last night, Phil, probably had a lot to say about.
Yeah, we see that, and we see them all here in the chats. Ian is the best ever. He never sleeps. Ferum and Ian, yeah. So I mean, guys, this is
I
amazing.
sleep. I sleep.
This is exactly what Crypto Banter was created for. It was created for communities to come on to talk, to banter. I mean, we talk crypto all day long on Telegram and on Twitter. We wanted to create an AV medium that people could listen at their desks while they're working and really just talk crypto. Ian, I want to ask you a question. Projects in the DeFi space that you're bullish on, other than FRM or other than Ferum?
Well, Bondly's got to be right. Bondly's got to be right up there. I mean, Brandon's an excellent leader, and I think they're doing something that we need to do in the industry, which is bridge the gap between, the pure crypto world of sort of super DeFi heads and actual real world applications, and that's what Bondly's doing, I think, masterfully. So Bondly, I'm obviously super excited about. Another one that I really like that just came out, in fact, today, is called Plasma Pay. Yes. They build a DeFi platform that allows you to do pretty much anything you want to do in DeFi, but all in this wonderfully slick and attractive app. And they have a ton of partnerships coming down the pipe. I'm close with their team, so I'm super bullish on Plasma.
Can we just dive into Plasma Pay? I mean, it literally launched today. It was an auction that came out at 8 a.m. Eastern. There was no pre-sale. This is a public round, a public sale, right?
No. So in fact, there was no public sale. There was only a pre-sale. And so what they did is they generated a lot of hype and excitement around the listing because most people couldn't get into it, right? And I think it did a 10x or something. It's sitting at maybe 11x now. I mean, so they're going to do great. They have a real product. They already have hundreds of thousands of customers. They're the kind of project that I want to see in the space. No more fluff, vaporware. I want projects that launch with real products, real users, real traction. And that's where we put our money and our support.
So Plasma Pay is now, I'm looking at the charts, it's trading at 10 cents. I picked up a few earlier on today at 10 cents. That gives it a market cap of about, it doesn't actually talk about the circulating supply, so very hard to talk about it. On a fully diluted basis, the market cap would be about 100 million now, but I guess fully diluted is not the right way to look at it.
Yeah, we'll see where the valuation ends up after things settle. But I think long term, they're incredibly strong because of the fundamentals, right? Because they have a real product, they have real users. I believe they're bringing in revenue, right? It's not that all that different from a project like FERRUM, right? Like there's real substance behind it. That means it can stand the test of time. There'll be ups and downs. Investors will sell, others will buy. I mean, that's crypto, but Plasma Pay will be here for a long time, and I'm super bullish on them.
All right, one more before we let you go. We've got one of the most exciting projects in the space holding on the line for us. That's Injective Protocol. Been dying to speak to Eric. I'm also a bag holder of Injective, just for full disclosure, as I am of Ferum and I am of Plasma Pay. So just a full disclosure to all the viewers out there. One more token from you.
Oh, for me? Yeah. Well, God, I want to thank everyone who popped in, my community. God, there's so much more coming for FERRUM. You guys think it's just about the pre-sales, it's just about Bondly and the one we have announcing next. There's so much more coming, guys. I mean, it's 20. I think 2020 was big. 2021 is going to be even bigger for us. So thank you everyone for their support, and you know where to find me if you have any questions about FERRUM or need anything from us.
And of course, support CryptoBanter.com by hitting the like button, hitting the subscribe button. Right now, please, I'm reaching out to the Ferum community so we can bring you more of this coverage. We are going to cover a lot more of what Ferum is doing. Love to get the guys, love to get you back on the show. Ian, thank you so much. All right, and speaking of big projects, we promised you 3 big projects today. You've seen Bondly, you've seen Ferum, And now, of course, we have another gem for you today, a project that I also got involved in right from the beginning. And the project is called Injective Protocol. I've got Eric Chen, who's the founder. Eric, welcome to Crypto Banter.
Thank you so much for having me.
So, Eric, the reason why we reached out to you is because we've had for the last week a lot of pressure to bring you on. All our viewers and all our listeners are saying, look, get Injective Protocol on, get Injective Protocol on. The price of your token has gone up significantly on the back of one or two announcements, which I want to talk about today. But for our viewers who don't know what Injective Protocol is, maybe take us through Injective Protocol, who you guys are and what you're all about.
Yeah, so Injective Protocol is the first layer 2 derivatives exchange that unlocks the full potential of decentralized derivatives and borderless DeFi. So we actually have 3 layers. There's the Injective chain layer, which is a custom single-purpose chain focused on specifically derivatives exchanges and decentralized exchange in general. So there's a lot of optimizations being done on that level, along with maximum composability with the Ethereum and other chain layers. There's also Injective Exchange, which is a pretty interesting mechanism that aligns all the stakeholders within an exchange to maximize, growth and to compensate everyone properly for their work by contributing to this decentralized protocol. And number 3 is the Injective Futures. So that's mainly sitting on the EVM layer. That's maintaining all the settlement and keeping a tab on all the balances of everyone's derivative positions. So right now, recently, we've launched our Solstice testnet. That's the first phase of our testnet. We actually closed our early access so far, and we're about to release like a full-on trading competition very, very soon. Can't wait to share more about Injective with you guys.
So this testnet that you launched, I guess this was the announcement that came out earlier this week. What exactly did you guys launch? Yeah,
so we launched the exchange, basically. There's a couple of markets that you can trade on. There's some interesting ones that we're also working on right now. I think so far, beyond just token perps, we also launched a gold market, which is super interesting. We're also about to launch another, derivative product that's never been seen before from other places. I think we're going to be pushing that out around, I would say today's Thursday, maybe Monday or so, the latest, just to get everyone to check it out. So we actually closed our early access. So if you haven't signed up for it, you have to wait for the full release. But for those of you who kind of already gained access to the early access, then that's gonna be a super interesting market. It's the market that I'm most excited about.
When you say we have to wait for those people that didn't get onto the early access, for those that have to wait for the full release, what are we talking about in terms of timing? When can we expect the full release?
Yeah, we do that in pretty rapid fire fashion. So right now we're just making some upgrades on the infrastructure to kind of satisfy everyone's query needs and stuff like that. Because right now we only have we didn't expect so many people to be constantly placing orders, and especially when it comes for trading competition, that's when everyone actually starts trading us seriously across the world. So we want to the point of the early access is that we want to pinpoint specifically what is the traffic amount that we can handle for our current node infrastructure, and what we can do better in terms of optimizing the matching side and also the exchange side to make sure that we can handle that much load. So basically for a full release, that's when we switch over the infrastructure, reset everyone's test and wallet balance, and launch with a super fair and super interesting trading competition.
And when you launch, what are people going to be able to trade on the platform? What kind of what are the pairs? What are the tokens? What are we looking at?
Yeah, so I mean, right now, live on the exchange, we have BTC, we have ETH, our native token, BNB, Polkadot, Elrond Gold, the synthetic gold based on a Philadelphia gold price, Link, Uni, Wi-Fi, Alpha, Kava, and Keeper. So right now we're just testing different markets with different levels of volatility, seeing if 20x leverage works. So far, we actually haven't seen that many liquidations per se. One thing that we're really excited to see is we want to see if someone would ever have to tap into the insurance fund, because that's one of the things we're trying to test the most right now. So we're also launching a few more markets. I would say that are not just tokens, and that's going to be announced very soon.
Now, what was the inspiration for you guys to build this? I mean, it sounds awfully similar to BitMEX. when you speak, you sound like you're solving a lot of the BitMEX problems. Is that what the inspiration was? Was the inspiration to launch, a more decentralized or a decentralized type of BitMEX?
Yeah. So basically, we started off by building this fully decentralized exchange infrastructure. We kind of realized that, like for order books, almost everyone use a centralized limit order book. So that's a huge problem for us because we kind of realized that, if there's one layer of centralization, that's what the SEC and the Ethereum case was kind of hinged upon, is that the server itself maintaining our order book for everyone to check out the order book, that's completely centralized. It all requires, a single source of truth. So we decided to do better than that. We started off with building, like an order book layer, and slowly we started expanding, over the course of last year into adding a settlement layer and adding the scaling layer on top of Ethereum. So now, all the user needs to interact with on Ethereum, given how high the gas fee is right now, is to just deposit a token into the chain, and all the fast settlement and also fast order matching is going to happen on our native chain.
So are we talking about running a parallel chain or a side chain to Ethereum, but then still using the Ethereum blockchain from time to time? Or is this a completely different chain?
Yeah, so I would say this is more of a completely different chain. The consensus does not require or rely on the Ethereum consensus, so it's not really accurate to say that it is a side chain. The layer 2 definition doesn't necessarily it might be moving off of some strict definition by some layer 2 solutions out there. So I would say right now the more accurate is just it's our native chain, and we have a really interesting pegging mechanism that connects directly to the Ethereum, where the consensus, all the validators participating within the chain actually has that responsibility and the slashing condition to be a fair and just watcher for the Ethereum on-chain events.
Eric, one of the things that people are saying in the comments and people said earlier in the Telegram was they were saying that the interface that you guys have built is superb. The look is superb. I guess that's people who've got early access. Is there any way you can share your screen and just show us the type of experience that a user can get on this kind of, call it derivatives trading DEX or something along those lines?
Yeah, sure. Give me a second.
While he is sharing his screen, guys, I just want to remind you that our next segment is one that I've been looking forward to a whole lot. And that is we're going to talk to Ryan Selkis from Messari. He spoke about his thesis, or Messari's thesis for 2021. It was 120 or 150 odd pages. It was a crazy number of pages, but I must say I read the whole thing, and I think I'm on the third time reading it just to make sure that I haven't missed anything. So don't miss that. That's a big segment, and that's coming up in the next couple of minutes. Eric, I want to share your screen and show our viewers what this looks like. Wow. Okay, so it really does look. It has everything that a centralized exchange looks like, right? Yeah.
But I mean, honestly, the entire infrastructure is fully decentralized. So obviously there's this wallet component. So we've actually built that into the actual, wallet interface. So basically, usually the users would have to interact with the MetaMask, but in order to streamline the experience, especially for the exchanges experience, if we were to use something that's more streamlined, like direct auth, that's why we use a custom wallet for now. But obviously, MetaMask is compatible. It's just that when we were testing the testnet, during our private phases, MetaMask was probably one of the biggest UX pain points. So that's why it looks and feels like a centralized exchange. It doesn't show a MetaMask. But yeah, it's a very interesting infrastructure.
And can you see depth of orders? Because I think one of the criticisms around DEXs is, and I think that's pretty much brought on by Uniswap, is that you can't see the market depth of the orders. Is this, this looks like you can see the market depth and you can actually input orders at a certain rate.
Yeah. So yeah, let's say, if I want to long at let's say $2, 1 INJ. Yeah, it'll just show up here. It's a pretty interesting interface just in general.
Amazing. It looks absolutely amazing. Eric, it's been a great pleasure having you on our show. You have been one of the most spoken about projects in this on the show, and I'm glad that we could get it on. We'll stay in touch with you for any further developments, and especially the development of opening the platform for everyone to trade. I guess that's something that we do want to hear about because our viewers would like that. So thank you for coming on to Crypto Banter.
Yeah, thank you so much.
Alrighty, so that brings us to the end of the segment, but now we've got something amazing for you guys, our community. Alrighty, so we've got 3 weeks left of 2020, and then we head into 2021. Now, we can expect big changes in 2021. A lot of them can be legal changes, legislation, and a whole lot of stuff that's coming in. But is your crypto portfolio ready for 2021? Are you holding the right coins? Do you have a thesis? Are you investing around a specific thesis? If you haven't, then I highly recommend that you call up or read the Masari report or the Masari crypto thesis for 2021. It's a lot of reading, but absolutely worth it. I must say, when I first started reading it, I thought it was going to be much shorter. It's long, but it's amazing, and it really does touch on almost every segment of crypto. Ryan Selkis, welcome to Crypto Banter.
Thanks for having me. It's been a while, man.
It's been a while, and I guess you guys have been heads down and you've been working, building what I think looks now much more like a Bloomberg terminal for crypto.
Yeah, we had a really busy couple of weeks. Not only did the crypto thesis report come out, it's been very well received in the first 24 hours, but our research team published a large report on Ethereum 2.0 as well. For those that are looking to get exposure outside of just Bitcoin, I think that primer is maybe a Bible to help people that have been red pilled into Bitcoin but are thinking about exposure to the asset class beyond just Bitcoin. And then, of course, we had the new homepage that launched, which is a modular, information-dense design on desktop, kind of catering to crypto professionals and power users, but still looks really, really good on mobile as well. So we're ending the year on a high note for sure, and it's been the culmination of a few years of building now.
All right, let's go a whole lot of steps back, and I think I want to land up. I want to show the viewers what the screen looks like, because I was blown away by the look of the screen and how easily accessible the information was. I was a trader back in the day, and this really is the closest thing that I've seen to the Bloomberg information screen. But you guys, if I remember correctly, you started very early, and I want to say it's 2017. It maybe was before, but I think you called bullshit on the ICO frenzy. And what you looked to do was to create some kind of credibility by getting these companies to report. And I guess that was the beginning of Masari. Is my take right there?
That's more or less right. We knew that there was a kernel of innovation that was really incepted in 2017 with these ICOs and the concept of decentralizing and tokenizing different networks that could have future compelling economics. The issue in 2017 was most of it was copy paste, shenanigans, and not a whole lot of innovation outside of just writing white papers and pitch decks, which didn't really justify the valuations these assets were trading at. So we started the company with this paradoxical view that the token economy was going to be diverse and thousands of assets would ultimately be tradable, and ultimately this would subsume the larger equity markets potentially even. But it was going to take a long time, and in the meantime 99% of the tokens that we saw were going to wash out. Maybe not 99%, 90% of the tokens that we saw in 2017 were going to wash out. And it looks like we were correct on both fronts, at least early on. The big difference between today and 3 years ago, of course, is that we and others have done the work to think about what are the fundamental drivers of these assets and how can we conceptualize them and think about their long-term value. And B, that the teams have just had time to build and actually bring these ideas to fruition, at least the ones stuck around. And we're able to kind of tell that story visually and through our research.
And so now, do you keep a library or a catalog of projects and filings? I mean, is that what you guys have created? So give us an idea for the type of information that you guys have on these projects.
We started with a disclosures registry that more or less mimicked Edgar. but we knew from day one that as these protocols gradually decentralized and truly did become community-owned marketplaces, you weren't going to necessarily have a company that was responsible for disclosing. So we had to figure out what methods we were going to use to get the equivalent of a prospectus or series of 8K disclosures from communities when it wasn't really clear whose responsibility that was. So we do this in a few ways. One, we work collaboratively with about 75 of the top protocol leads, I'd say, at this point. These are the foundations, the kind of core developer teams, et cetera. And we've built out, information pipes between them and our backend to very quickly make updates either to kind of the master profile, which is like the prospectus, or more event-driven disclosures around things like governance changes, new software releases, security vulnerabilities, stakeholder changes or private placements, listings on exchanges. Basically everything that you'd want to see if you were using a traditional, corporate actions tool. And that is juxtaposed with all the quantitative data sets that we're integrating in one interface that's available for viewing either on a sector by sector basis, asset specific basis, or in this home dashboard, which is now our homepage at Masari.
So the more you talk about it, the more it does sound like the Bloomberg that traders and investors use to gather information about listed companies today or listed equities today. All right, so let's move on to the report, because I think I want to spend a lot of time on this report. If I'm not mistaken, this is the third time you've written the report.
It's the fourth, but the first two were Medium posts versus reports. Last year, we turned it into a full-blown report of about 70 pages. This year was a little bit longer.
Yeah, it was about 120. I've been through it once. I'm at the end of my second time around. So I'll quickly want to go through the Bitcoin thesis, because I think the Bitcoin thesis is kind of obvious. And I think that everybody that's watching the show is definitely a Bitcoin fan. But quickly recap for us what the Bitcoin thesis is for 2021.
In a nutshell, it's become a macro story, and Bitcoin now has an inflation rate that's below 2%, which is the target inflation rate for the Fed. It's kind of on par with gold in terms of annual issuance. And the meme of digital gold siphoning value from the physical gold markets is really sticking, in addition to just really positive macro tailwinds with unprecedented levels of debt monetization, negative yielding debts, and now institutional investors that are finally making it safe for other institutional investors that are also RANs or fast followers to take the career risk that wasn't palatable a couple of years ago and put 1%, 2%, 5% of their assets into Bitcoin and cryptocurrencies. I like to say that what Druckenmiller and Bill Miller and Raoul Pal and so many of the other institutional money managers have done is more or less on par with what Mark Andreessen and Fred Wilson did in 2013, de-risking venture capital bets into the space. These other folks have done the same for institutional money managers this year.
Does this happen quickly? I mean, is 2021 going to be the year that this happens like very quickly? Do they get institutional FOMO? Do they get gold FOMO? Do they get Bitcoin FOMO? Does that kind of thing exist? Or is this going to be a very slow, long process where 2021 is just like one step in the process?
I don't know. I think people look at the past performance of Bitcoin and they see these 4-year cycles, and they just automatically assume that next year is going to be kind of the next bubble and the next step in that cycle. I honestly have no idea. I personally am very bullish on next year, but the elephant in the room is what's going to happen from a regulatory standpoint worldwide. And the issue of privacy and self-custody versus supportability from the major centralized and regulated exchanges and institutions that are supporting these assets. It's very much an open question whether you're going to have interoperability between these two systems, or exactly how the crackdown is going to look in Western markets and Eastern markets alike. And I do think that could be maybe the one thing that would slow the momentum right now. Even still, I think it's probably temporary.
But let's talk about legislation in the space. So is legislation and regulation in the space a bad thing? And when I say a bad thing, I know for you and I, we would prefer for there to be less legislation, less clampdown on Bitcoin and cryptocurrencies. But for the institutions, the more legislation and the more regulation, the more bona fide that this asset becomes and the more they can invest. So is it a bad thing or a good thing net for the industry? Not for you and I, not for the people that want to custody their own money and whatever else, but for the institutions, bringing institutions into the game. Is it a good thing?
Well, the thing is, I think that the regulations already exist, and the edges of the network, which are the exchanges, the prime brokers, the custodians that secure other people's money. All of those regulations already exist. So nothing is new there, and that's frankly the only reason that any of these institutions have gotten comfortable making their initial bets and initial allocations. The infrastructure is there. And there is some clarity from a regulatory side in terms of how this is taxed, in terms of how you can abide by traditional compliance requirements and money laundering and know your customer rules. All of that's already been set. What we're talking about now is a much bigger systemic issue of whether the powers that be are going to want full surveillance of these networks and kind of the ability to know your customer, or to know exactly when you are withdrawing the equivalent of a cash withdrawal, if you are truly the person that's receiving that money and if that address is registered and so on and so forth. So the worry now is not, will this be over-regulated so much as it is, will there be a crackdown that is so severe that it basically splits the network into clean coins and dirty coins. And the graphic on the screen is kind of the perfect example. They're going to use the old standbys of, Bitcoin is for terrorism and money launderers and child pornographers and drug dealers and all these other type of nefarious actors as an excuse for just further clamping down on private property rights.
I would imagine that it is unavoidable that that's going to happen. And I would imagine that when Brian Armstrong broke that tweet about the potential bullet legislation or that was going to come in, where they would have to know, non-custodial wallets and the beneficiaries of non-custodial wallets, I would imagine that is a given and that we're operating under that environment as a given. And we're going to have to learn to operate under that environment. And that may actually bring institutional money into Bitcoin. It's going to break DeFi, but it's not such a bad thing if we want institutional money in.
I don't know if it breaks DeFi, right? Does this become a situation where you truly have two parallel economies, and Bitcoin at that point you could argue is co-opted, and now what are the private market alternatives that exist in the truly decentralized financial realm? So fully unhosted, fully unregulated. Is it possible to transact in that regime? I would argue that it is. And this is maybe the best argument for why this legislation and these regulations are short-sighted. If I have a self-custodied Bitcoin wallet and you and I exchange money over beers, that is not illegal, unauthorized money transmission. That sort of private commerce should not be invalidated. This is something that I think the industry needs to fight basically to the death. Because it would mark such aggressive overreach on the part of the state, in the West and the East, that it really starts to break some pretty uncomfortable boundaries.
But it's happening there anyway, except for cash transfers, and they're trying to eradicate cash. But if I pay you using Venmo or PayPal, there's a record of it. In fact, that the record is more than public.
Sure, and that's absolutely true. I guess my point is they might make it difficult for centralized exchanges and centralized institutions to support this, but they can't necessarily make it illegal for you and me to pay each other using a digital currency over beers. They can tax it, right? They can ask you to self-report that, but I don't think that illegalization of self-custody of digital assets, you're basically talking about illegalizing a person's ability to run certain computer code on their own devices, and that would be unprecedented. I think that would be challenged in the courts and probably make it all the way to the Supreme Court, quite frankly.
Yeah, but I mean, we know there was a G7 call the other day. We know they discussed cryptocurrencies, COVID, and a recovery plan from COVID. And now we see that France is coming out with saying that even as soon as the next week, they could have some kind of legislation or requirement to have crypto to crypto wallet transfers marked. So that is kind of scary. I want to move on. Let's move away from legislation, and I want to move to Ethereum. The reason I want to move to Ethereum is because I think you were one of the early guys who was in Bitcoin, but had an open mind to Ethereum. And I think if I remember correctly, we spoke in 2017, and whereas you didn't like the ICO boom, you called bullshit on it, you did like Ethereum as a chain. Tell us your views about Ethereum 2.0, and what happens in 2020, why Ethereum 2.0 is so important.
So let's talk about Ethereum in particular. First of all, I would think Bitcoin and quote unquote crypto are almost two completely separate things now. Bitcoin is an asset first tech enabled innovation. Ethereum is a tech and platform first asset enabled innovation. What I mean by that is Ether is basically the fuel that runs these applications, and it's the assets that people have to hold and now stake with the move to Ethereum 2.0 in order to secure the network and actually process transactions in a decentralized manner, versus Bitcoin's proof of work and even Ethereum's legacy proof of work mechanism, which relies on all these funky mining apparatus.
Can I stop there for 1 second?
Sure.
And say, is that a function because Bitcoin is more mature? People care less about the technology and more about the asset. It's almost like we don't really care about the technology that runs the internet, but we care about the fact that the internet works. Bitcoin works and it's a store of value. Ethereum is still a technology play because we're not using the applications.
Well, we are using the applications. I just think there's an open discussion as to how Ether itself should be valued. I think about it as a defensive asset. It must have some lower bound of value that is sufficient to stake and earn sufficient rewards that would secure this as a network. So you almost work in reverse, right? If there's $1 trillion of transactions in economic activity that's processed on Ethereum this year, what nominal dollar value should be flowing to the parties, decentralized or not, that are ultimately securing that blockchain and its transactions? And if there's $1 trillion worth of value, then 1% of that is going to be 10 billion, a billion for 10 basis points. So probably somewhere in between there is your necessary annual security spend, if you look at it that way. And if that's the implied earnings of the network over the course of a year, again, in order to secure those $1 trillion worth of transactions and on-chain transfers and smart contracts, then you can maybe apply some back of the napkin multiple to that in terms of what the total market capitalization should be for the network. So there's different ways to kind of look at this from a valuation standpoint that help you make sense not only of your mental model for where the asset should be traded, but what is required from a security standpoint in order to prop up this whole ecosystem and make sure that it's fully secure. But I absolutely think it is wrong to say that no one's using Ethereum applications, and the evidence of that is that's wrong comes down to the fees that the network is able to generate on a day-to-day basis, again, that are paid in Ether. The Ethereum network is second only to Bitcoin in terms of the fees that it generates per day for its miners. Actually, it's eclipsed Bitcoin. I misspoke. So in the last 24 hours, Ethereum is at $3 million worth of fees versus about 1.3 for Bitcoin. So it goes to show you how much activity is going on this network.
Yeah, I think a lot of that, the reason for the eclipse is me doing some DeFi transactions earlier, and paying these extremely high gas fees. In your thesis, from what you're saying, if the cost of ETH ultimately is the cost of or is a function of the cost of securing the network, then of course ETH 2.0 and the successful launch of ETH 2.0 kind of changes everything, right? I mean, that's the turning point of everything here.
Mm-hmm.
Yeah. All right.
Yeah, I think so. Now it's going to take a couple of years for this process to play out, and so what that does is it leaves openings for other smart contract platforms and so-called layer ones that are offering much of the same functionality, but that have already moved to this proof of stake environment that is potentially much more highly scalable. It hasn't been battle tested at scale. The security assumptions are still need time to kind of prove themselves out. But I think that's probably the biggest technical item to watch in the next couple of years is how quickly can the Ethereum community move through the different phases of this migration, which right now is slated to be multiple years.
Do you think that there could be a real competitor to ETH? And I say that, like, would you put your money where your mouth is and take some bets on, I don't want to call them Ethereum killers, but parallel chains or other chains that may eat some of Ethereum's pie?
I think the market has already done that. I don't know that I necessarily trade around these different assets with that in mind. But if you think about the market as a prediction market right now as to how dominant Ethereum is going to be, well, right now, if you just look at smart contract platforms like Ethereum, Cardano, Polkadot, Tezos, Cosmos, some of the other kind of newer protocols that have come live recently. Ethereum has a 70+% market share, which is much, much lower than Bitcoin's in just kind of the currency pure plays. If you think about Bitcoin versus currency pure plays, Bitcoin's about 90% plus dominance versus things like the Bitcoin forks and Litecoin and Zcash and the like. Ethereum, basically the market is pricing in a 30% probability that, the likelihood that 30% of the value in that realm accrues to protocols and tokens not named Ether. So I don't know whether that number should be 30% or 50% or what have you, but it certainly feels about right, given that almost all the activity today is on Ethereum, but it's still a risky proposition in terms of understanding where the puck will be tomorrow.
And do you think that the market is pricing the probability of success? In other words, if I look at CoinGecko, I'm actually going to bring my screen back for our viewers. For our listeners, we are looking at CoinGecko, and we're looking at the smart contract protocol specifically. Now, if I go down here, Ethereum is on a market cap of $63 billion. And then probably the first smart contract platform is Polkadot, and that's coming in at $4 billion, and just under is Cardano. Those two keep swapping. And then
Ran, you're doing it wrong. Let me share my screen.
Okay.
Because you're doing all wrong here. And
much better.
And really, what you want to look at right now is the sector by sector comparisons, right? So what you just pulled up on CoinGecko is a ranked market cap list that conflates stable coins versus layer ones versus currencies. And really what you want to do is you want to look at, Ethereum versus its competitive set. And you can see the drop off from Ethereum to, Cardano is pretty significant. You're talking about an order of magnitude between the difference between Cardano, Polkadot, and Ethereum, which is the king right now in that realm. And you can apply the same logic to, DeFi, or if you're looking at kind of systemic risks and stable coins, you can do that very quickly. So,
I mean, this is I'm Bloomberg. I'm looking at the Bloomberg of crypto. It's called Masari. For our viewers who are watching this, for our listeners who are listening, you guys are really missing out. For our viewers, this is amazing. What Ryan's showing us is how the platform works indirectly. Ryan, go back to the smart contract platforms. Let's just have a look at Ethereum versus the other smart contract platforms. So Ethereum, and then underneath Ethereum is Cardano, and then Polkadot, and then EOS. I mean, and you're talking, guys are a far cry away. So I guess what the market's telling you is that Cardano and Polkadot are probably the only two protocols that may even have a chance.
I think that's right to a certain extent, but again, we have a lot of the up and coming blockchains. They have lower market caps, but they have quite a bit of treasury at their disposal. So if you look at kind of the fully diluted values of these networks, many of them are in the billions, and those treasuries aren't necessarily sell side pressure. that's a fear that they could represent an overhang, but they also represent competitive weapons to incentivize developers and other application providers to ultimately come through the system. And so, if you think about this on a fundamentals basis, you can also take a look at what the implied 10-year forward market cap is once some of that supply hits the market. And you'd see in that case, Polkadot would be fourth, and then some of the other smart contract platforms are quite a bit higher up this list when you take into account their fully diluted status.
Alrighty, let's move past Ethereum. Let's move past smart contracts and let's talk about DeFi. There's been an explosion in DeFi. Some people will tell you that the DeFi explosion started the big bull run. I am now at the point where I'm saying I'm starting to feel this ICO frenzy feeling. I'm starting to see a lot of blind money going in, projects being hyped on a size of Telegram groups and potential following. What do you make of this DeFi thing? Is it sustainable?
Well, I think DeFi is absolutely sustainable, and the reason is, I think we saw with the ICO boom, you saw a lot of copycats and kind of Me Too's once it became clear how much money was getting made in short amounts of time. But the kernel of innovation behind this concept of yield farming really was just something that pulled forward demand into these marketplaces. A protocol like Compound, which is on-chain lending, it was going to be very hard, or at least a very slow process, to bootstrap liquidity in that market and ultimately aggregate demand between lenders and borrowers, because the lenders would be taking on all sorts of idiosyncratic risk with the smart contracts themselves. Created a dynamic where you're essentially picking up pennies in front of a steamroller, potentially. And what yield farming did is it granted a secondary incentive in the form of a governance token. And those governance tokens could confer not only voting rights, but also system parameter rights, like how much of a fee accrues to the protocol itself and the protocol's treasury, which again feeds back to the token. So it's kind of the circular reference, and rewarding early contributors to these networks was tantamount to offering a percentage of the network as an employee or contributor option pool in an early stage startup. And what that did is it kind of had the dual effect of pulling forward, billions of dollars worth of demand, because now instead of making 3% on your lending, you're able to make 3% plus 20% or whatever the equivalent, equity economics are going to be like. Not too different from working at a startup and you take a $50,000 salary, but you're hoping that your equity is ultimately going to be worth, millions and millions. The other thing,
original risk, get the outsized return, but don't get it for being an employee. Get it for actually providing liquidity, believing in the project. I mean, it makes perfect sense. I think that this mechanism of liquidity providing yield farming is a game changer. It's an absolute game changer. I see you're putting your screen up. I guess you want to show us something on the screen.
Well, what I was going to say is there's the concept of quote unquote blue chips in the DeFi space. I call them the uneasies. Ethereum, Uniswap, Aave, Yearn, Compound. Some of these are kind of considered the best in breed. And these were all projects that had significant demand before yield farming. Now you can actually, track them on a fundamentals basis and see that, in aggregate, you're talking about this entire decentralized economy being about $8 billion. The reason I wanted to pull this back up isn't just to kind of show off our charting tool, even though it's cool, but the drop that we saw from about 43,000 at the peak for something like Yearn Finance, and this is just one illustration, in a couple of months was down below 10,000. So about a 75% haircut, 80% haircut plus in just a couple of months. I think most people thought that was basically like the ICO unwind, but in hyperdrive. But then when you see down here is just insane volumes and an insane resurgence on the way back up into the 20-something thousand range. So the speed and fury of this resurgence in the course of the last couple of months, I think shows you that this wasn't just like a pump and dump, like the game is over type of move, but there's something much more sustainable here, at least for the networks that have an actual path to accumulating network fees, almost like a cooperative.
Yeah, I guess I must say, I really think it's a game changer. And speaking of game changer, I think your charting tool is a game changer. And I promise that I'm certainly never going to use CoinGecko on the show again. From now on, it's only Masari I've got. I mean, I can't believe that I've been driving. My life has been so difficult driving with the other ones when it's all available for me at the touch of a button. We are running out of time, but I do want to talk to you about one other thing, which is privacy coins. We're entering the realm of increased regulation. I know that you're a big Zcash fan. Not sure if you're a bag holder or not, but certainly a Zcash fan. What is the future of privacy coins in this new economy? What does 2021 bring for privacy coins?
So I've been a very outspoken bull on Zcash for a few reasons. I will say privacy in general is something that I'm certainly a little bit more risk averse than I was even a month or so ago, because it just seems that the powers that be are so hostile to this as a concept. I think if we can make it through relatively unscathed, and common sense prevails, and some of the new regulations and legislation that we see around the topic of self-custody and privacy in particular, then Zcash is I think the winning horse. But that bet has become pretty risky right now, and so I think Zcash is still my second largest holding. I did take some gains on it and reallocate it to DeFi in the last month or so. But it's still my second largest holding, and if we do have common sense prevail, I think it'll re-rate higher by an order of magnitude.
My concern is that what we call common sense and what the regulators call common sense are two different things. And I think if
I agree.
The first thing that may go out the window is privacy coins. I'm not sure that they can stop them, because I don't know how, privacy coins aren't institutional coins. They are things that you and I trade. I'm not sure how they would stop trading them. I guess what they maybe could do is take them off centralized exchanges, but that's probably the end of it. I don't think they could pass a law that said, hey, you're not allowed to hold privacy coins anymore.
Well, that goes back to my comment about a two-tiered system, right? I think the same is true for Bitcoin, for Ethereum, for DeFi. And, in some respects, self-custody restrictions, or at least interactions between regulated entities and self-custody wallets, that could be arguably a boon for DeFi, because it basically forces you to create another ecosystem in parallel that completely circumvents the hosted realm. And honestly, I think that's a lose-lose for everybody. Obviously, a lose for the industry, because everything's still so immature. But it could be, you could take the flip side and say it's throwing everybody in the deep end and see if they can swim.
Does Coinbase list in 2021?
Yes.
Yes. Market cap?
I don't know. I think in 2018, when they did their last raise, the mark was around 8 billion. I've seen, maybe in the $12 billion range for secondaries. I'd probably buy at 12. But the thing with Coinbase is they were very smart early on to stick to their guns and not get scared off.
Not discount. They went with the 1% and they followed legislation.
Yes. Mm-hmm. Yeah, and what they did instead is they created this sidecar exchange, Coinbase Pro, that is one of the largest exchanges and one of the best regulated in the industry. But that's where the fees are low, the spreads are tight. But they kept kind of the retail prime brokerage that is this really clean and easy to acquire system. They kept that 1% fee, and I have no idea how that's translated into revenue versus 2018 when in that very choppy market the spreads were enormous and the markets were much less efficient. So I'm sure Coinbase Pro has gotten into ruthlessly competitive territory, but Coinbase quite literally takes their 1 in 20, not 2 in 20, but 1% on the brokerage fees, and then 20% on things like staking and the like. And most people, including me, think it's a pretty good deal because you can do it passively.
Yeah. Alrighty. And are there other crypto listings on the market, on the big markets in the US next year? And Coinbase is one. Are you expecting anybody else to come out as a crypto listing?
I think BlockFi will make it to market as well. I think BlockFi's growth has been tremendous, and they're basically starting to look more and more like a crypto bank with the introduction of their new credit card and some of the other products that they have in the pipeline. I think it's not as robust or proven a business as the likes of Coinbase. It remains to be seen how much of a moat that BlockFi has, but I think that they will test the markets, or more likely, I bet they go public through a SPAC.
I must say, I think that what they've done is incredible, but the amount of time that they've done it, I guess that's the most impressive part. They're not as old as Coinbase. I mean, they're not the size of Coinbase, but I think this is a very young business. I don't want to be inaccurate, but this is a very young business that's done amazing things. Speaking of BlockFi, I want to bring up one more thing before we let you go. I know we are running over time, but it's such an interesting conversation. The Grayscale premium. It's like everybody is buying Grayscale, putting their crypto holdings into Grayscale because they know that they can buy it at net asset value, wait for 6 months, and then dump it on unaccredited investors. What's the catch?
The catch is the SEC is incompetent. And so that premium will persist for as long as our regulators protect investors by hurting them.
Hold on. I get that. But right now I can buy Ethereum, I don't even have to buy Ethereum. I can take my Ethereum bags that I hold. I can give them to the Grayscale Trust. I can wait 6 months and I can dump them and I can make over 100% profit depending on where the premium is, specifically around Ethereum. On Bitcoin, I can make between 20 and 50%. All I have to do is hold it for 6 months. And the people that are getting killed as a result of this are the unaccredited investors.
Correct.
What happens if we hit a bear market? Now, what I did was I called the charts of the premium in the bear market. In the bear market, the premium actually went up. What happens when we hit a bear market and one of the institutions in the Grayscale Trust decides to sell and the unaccredited investors don't sit there buying it? There's no demand from the unaccredited investors. Do you see a situation where the premium actually goes negative?
Well, it has gone negative in the past. It's been, I think, a very, very short period in time. I think 2015 or 2016, GBTC went negative temporarily, but it couldn't have been more than a week. And other than that, it's always traded at a premium. If it does go negative for some reason, I think the bigger risk is to some of the lending desks that accept those shares as collateral with the expectation this premium is going to persist over time. But there's ample liquidity now in the unrestricted GBTC and ETH shares that are floating in the public market. So I don't necessarily see that being an issue. I guess theoretically it could happen, but I don't think anyone's anticipating another bear market in 2021. So you're talking about things that are maybe a couple of years off.
Are we expecting an ETF in 2021?
I think so, because Jay Clayton's stepping down, and at some point, someone at the SEC needs to have some semblance of common sense and understand that not approving an ETF is allowing this really unhealthy premium to exist in the Grayscale products and other quasi-regulated ETPs instead of a properly functioning ETF that should be trading much closer to NAV.
And if an ETF is approved by the SEC, what happens to the Grayscale Trust? Do you think that the Grayscale Trust automatically becomes an ETF with a 2% annual holding fee? What happens to the trust? I
can't imagine that the SEC would approve an ETF not named Grayscale. it wouldn't make any, that's the Grayscale ETFs are the forcing function for the SEC to approve an ETF because it's getting ridiculous. It's just such an open joke that this is allowed to happen at billion-dollar scale, multi-billion-dollar scale, and the SEC continues to refuse the legitimacy of that product. And this is especially true now that it seems like most of the price discovery is happening in the West, which is different from BitMEX being the tail that wags the dog for the entire industry in recent years. I think that's changed this year, and it's safe to say that most price discovery is in the West and properly surveilled markets.
I think a lot of analysts called the demise of BitMEX as the beginning of a new era, and I'm not saying that they're down and out, but certainly they're not as relevant as they were that many years ago. Ryan, it's been absolutely unbelievable having you on the show. You've given us some great insights where we should be in 2021. Also, I've noticed comments that a lot of people are trying to subscribe for the Masari terminals. I think that's been great. I hereby make a pledge that there's no more CoinGecko on the show. It's only going to be Masari because the utility is amazing. Been an absolute pleasure. Thank you for coming on Crypto Banter. And I hope we don't have to wait until the 2022 report to get you back here, to get you back on our show, dropping your pearls of wisdom. Thank you so much.
Thanks for having me, Ren.
Great. Alrighty, guys, that is all we have time for today. It's been an unbelievable show. It's been a long show today, but I guess the content was so amazing. I was enjoying the show. I hope you guys were enjoying the show. If you were enjoying the show, hit the like button, hit the subscribe button. Come on, give us some love. One more time before we go. We hope we've helped you position your crypto portfolio as well for 2021. I've certainly got a couple of ideas. I'm probably going to dump my Zcash and my Monero, move them into Ethereum, Cardano, and Polkadot. Take bets off the privacy coins. Go much bigger into DeFi, much bigger into the smart contract platforms. And as Ryan said, the market is telling us that the two smart contract platforms that may be good or may be competitors are Polkadot and Cardano. Worth looking at. We'll also try and get someone from Polkadot onto our show. Guys, I hope you're well positioned for 2021. If you are out there trading, trade well. Let's hope that this volatility continues, but that we break up to the upside. It's time for me to go. I'll see you again, same time, same place tomorrow. And if you want us to continue right through the season, it is holiday time, but I think a lot of us want information. Hit the like button, hit the subscribe button, leave some comments. Tell us that you want us around, and then I'll speak to my production team and beg them to stay online throughout the season. I'll see you again tomorrow, same time, same place. And if you're trading, trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.